My friends, we now have to push, considering that our exam date has now been set. I think we now know that on the 15th of May, that's when the exam will be written. That means we exactly have 3 weeks to deal with the exam. So you know that next week is a long weekend. I even thought of giving you a long weekend, but then when I saw the dates, I said no, we can't afford to do that. So next week we'll look at non-current assets held for sale. The other week we'll look at effects of transactions in foreign exchange. I think those will be the 2 week topics that will be left. So next week we'll look at non-current assets held for sale. The other week we'll look at effects of transactions in foreign currency. Is that clear? So that maybe we'll have another weekend for revisions that we might have to do.
Okay, noted.
Right. So today I'm going to use the document that I already sent to you. All right. Last week we dealt with the theory on determining the impairment of assets. So today we want to be able to determine our impairment. Let me see if I have the things that I want. Right. I think there's one thing that I don't see here on my questions. Or maybe, okay, I will deal with it when I deal with impairment. Okay, I will deal with it. Because like we also have to know how to do the impairment of it of a group. But I will deal with it when I when I deal with non-current assets held for sale. Right. 10 Rand Limited is a leading provider of internet value-added services and is listed on the JSE Limited. The company is a 31 March year end. Right. I'm only going to deal with the, it says disclose the intangible asset note, including impairment loss disclosure, if any, to the annual financial statements of 10 Rand Limited for the year ended 31 March 2019. A total column is not required. Right. Impairment of assets. Right. We'll start to deal with the license. On 1 March 2018, 10 Rand Limited acquired an exclusive license to host an instant messaging IM platform for mobile phones at a total cost of $150,000. The result of the pilot testing of this IM platform indicated that it would be a preferred social media platform for most young South African users due to its well-diversified functions and services. The cost of the license is payable as follows, right? When we're dealing with the assets, how we're going to pay is not important for now. I think, but when we do in 2 weeks' time, when we deal with effects of transactions in foreign currency, that's when we shall see how it affects our recording there. So for today, we're not worried about how you pay. When you buy an asset, when you record an asset, you don't mind about how the payment will be made. You are only interested in the price of the asset and what we call the transaction date. Right. The license was available for use as intended by management on acquisition date. On acquisition date, it was determined that the license had an estimated useful life for 5 years, and the residual value of new was allocated to the license. Right. On 1 January 2019, a similar license was granted to a competitor company, resulting in a decline in revenue from the IM platform. On 31 March 2019, management of 10 Rand Limited determined the fair value less cost to sell of the license with reference to the current market evidence to be 1,290,000. whilst the value in use calculated based on the total net cash inflows expected from the use of the license was determined to be 1,350,500. An applicable pre-tax discount rate of 9.5% per annum was applied. The remaining useful life and the residual value of the license remained unchanged throughout the period. Right. Our financial year that we're looking at, it's ending 31 March 2019. Right. This license was acquired on 1 March 2018, which is in the previous financial year. Right. So that was the previous financial year then. Right. So now, let's do our calculations. License. Right. Our costs. When you buy an asset in Forex, you translate the cost of the asset at the spot rate on transaction date. Right. So this is 150,000 and was acquired on 1 March 2018. So we use the spot rate on 1 March 2018 to translate our asset. So we'd say 150,000 times 13.02. What do you get?
1953 and the 3 zeros.
I'm waiting for you.
Oh, 1953 and the 3 zeros.
Right. Right. Then our accumulated impairment at the beginning of the year, which is 31 March 2018. Remember that the year is ending on 31 March 2018. Right. We know that not accumulated impairment, amortization, sorry. Remember that for intangible assets, we don't have a depreciation in place of depreciation of what we call amortization. Right. We are told that it was available for use on our question date. So we'll provide amortization from 1 March 2018. Then on amortization date, on acquisition date, it was determined that the license had a useful life for 5 years and the residual value of new. So divide by 5. So it's saying 1,953,000 divided by 5. But remember, it was only bought on 1 March 2018. So last year we only used it for 1 month. Last year we only used it for 1 month. So multiply by 1 divided by 12. What do you get?
32550.
Right. Then we get our carrying amount on 31 December 31 March, sorry. 2018. Right. Then we'll have our amortization for the year. which will be 1953,000 divided by 5. It's now a full year. What do you get?
390,600.
Right. Then we get our carrying amount on 31 March 2019. Right. Now, the fact that there is a new license that has been introduced by the competitor, then we have to test for impairment. We have to test for impairment. Now, we have to subtract what we call the recoverable amount. Right. We have got the fair value less cost to sell was 1,290,000. Fair value less cost to sell sorry, let me just open this paper somewhere so that when I'm not on the paper, I can. Right. It's 1,290,000. And our value in use. Our value in use is 1,350,500. Right. So the recoverable amount is the higher of the two. So in this case, the higher is the value in use. So I'm going to use the value in use. So when you are looking for the amount to use as your recoverable amount, you compare your value in use and your fair value less cost to sell. The higher of the two will be your recoverable amount. So that means our recoverable amount here is 1,350,500. Right. Then we know that there is an impairment loss if the carrying amount is more than the recoverable amount. Like in this case, our carrying amount is 1,529,000 and our recoverable amount is 1,350,000. So there's a what? There's an impairment loss. So there's an impairment loss there. So the impairment loss will be the difference between the carrying amount and the recoverable amount. Right. So it will be
179,350.
right. So that will be our recoverable amount. Our impairment loss, sorry. So this is how we calculate our impairment loss. Any questions there?
No.
No questions. Right. So then we'll move on to the software. The directors of 10 Rand Limited decided to expand their services, and during the 2019 financial year, the company embarked on a research and development project to develop software for an online payment platform. Research commenced on 1 June 2018, and on 31 August 2018, all the criteria for recognition of the software as an internally generated intangible asset was met. Right. The day that all criteria is met, that's when we start to recognize the intangible asset. So our intangible asset will be recognized as from 31 August 2018. So all costs incurred before 31 August 2018 will be taken as an expense research cost, and will only include the costs in the tangible assets that were incurred from 31 August. Right. Development of the software was completed on 31 January. The day that it is completed and available for use, then that's the last day that we're going to capitalize costs. Right. On 1 June 2018, 10 Rand Limited employed an applications engineer that specializes. Okay, so let's determine the cost of the intangible asset. Right, on 1 June 2018, the 10 Rand Limited employed an applications engineer that specializes in online payment platforms, and 3 senior researchers to work exclusively on the research and development of the software. When they say they worked exclusively on the research and development, that means they were working full time on the research and development of the software. Right, the application engineer earns a salary of 95,000, and the senior researchers each earn a monthly salary of 35,000. All right. So on 31 December 2018, 10 Rand Limited concluded a 7.5% salary increase agreement with all employees effective from 1 January 2019. All right. Our research, remember that our development ended on 31 March 2019, and it started on 31 August 2018. So we'll not count August because the software was ready for development at the end of the month. So we'll say from September. So from September to December, the engineer, applications engineer, was earning 95. Then in January, the salary was increased. So we can say the applications engineer salary applications engineer salary right, we can say $35,000 from September until December, which is 4 months, plus in January, the salary had increased by 7.5%, so multiplied by 1.075. What do you get?
I'm getting 177,625.
Right. Then we have got three senior researchers. These ones were earning each 35,000. All right, so we can have researcher salaries. Three times 35,000 times 4 for the 4 months. Then plus 3 times 35,000 times 1.075 for the January month when the salary had increased. I see that our colleague is struggling with network there.
Yeah.
My friend, are you fine now? Right, what do we get?
532,875.
Right, so these were 3. No. I used the wrong salary. Yeah.
Which one?
On the engineer. The engineer was earning a salary of 95, not 35.
95. Okay.
So can we go back to the engineer salary? Correct this one.
And replace.
Make it 95.
Okay. It is 482,125.
Right. Is it 532 or 482? Okay, that's fine.
482.
Right. Then directly attributable electricity costs that were evenly incurred during the research and development phase of the online payment platform amounted to 17,250 per month. And we know that our development months are from September to January, which is 5 months. So we can have electricity costs. $17,250 times 5 months from September until February.
86,250.
Then we have on 1 February 2019, the online payment platform was available for use. That means from 1 February, that's when we provide for amortization as intended by management, as well as brought into use, and it had a useful life for 5 years. So the amortization will only be for 2 months, February and March. Remember, our year is ending in March. The residual value is nil. Right, so our cost would be right. Then we do our extract of the notes, the financial statements.
Excuse the noise. They're watching soccer in the other room.
Hello?
Excuse the noise. They're watching soccer in the other room.
Okay. Right, they said the total column is not required, so do our intangible asset here. Number 1, intangible assets. Right, my friends, we separate when we're doing this note, we don't combine internally generated and purchased intangible assets. So we'll have our purchased. Remember that the software was purchased. That is the software. And we'll have our internally generated. No, the software is the one that was internally generated. And the license was the one which was purchased. Right, we'll start with our carrying amount at the beginning of year. Which is made up of and the accumulated depreciation. Right, the acquired was acquired during the current year. Sorry, it was acquired during the previous year. So the cost was this one here, 1953. Then the accumulated depreciation was 32. This one here. Right. Then the one which was developed, they developed it in the current year. So this was 0, 0. Right. Then we have got additions during the year. Just a second. Right. There was an addition of the internally generated asset, which was at this cost here. Oh, sorry, I didn't calculate the amortization. Then amortization for the license, we have already calculated it here. The amortization for the current year, this one here. For the other one, let us say 101 250. They said useful life is 5 years, but it was only available for 2 months. What do we get?
It's 36708.
7 what?
08.
Exactly 708.
It's 36708.
I think something is missing on that figure.
Yes, 36708.
Oh, I didn't hear you 360. It was silent.
Sorry.
Right. Then we have impairment during year. Let's remember that our license was impaired. Right. Then we get our carrying amount at the end of year. The cost is 1953. Then this one is accumulated depreciation and impairment, because there is impairment here on one of the assets. So to get our accumulated depreciation and impairment, we add the one at the beginning plus these ones for this year. The one at the beginning plus these ones for this year. So to say this is equal to this. Right. Then here our cost will be this one. Then our accumulated depreciation would be this one. To get our carrying amount, it will be the cost less our accumulated amortization and payment. So this will be our intangible assets. I'm not yet done with the note, but any questions at this stage?
No.
Right.
No, so far so good.
Then you are supposed to state that the license is a carrying amount of 1,350,500 at year end, and a remaining useful life of, right, remember that our license, we had depreciated it for 1 month in 2018 and a full year, so 1 year 1 month out of the 5 years. So if we remove 1 year 1 month from 5 years, we remain with 3 years and 11 months. So we'd have 3 years and 11 months after taking out the 1 year and 1 month that had already passed at year end. Then the software is a carrying amount of 1,064,542. And a remaining useful life of, right, since this is 5 years and 2 months have already gone, so that means there will be 4 years and 10 months at year end. So you state how your intangible assets, the remaining useful life, and the carrying amount at the year end. You also report on the impairment, right? Then the question also says, including the impairment loss disclosure, right? So we have to disclose the impairment loss. Impairment loss. So in this note, you have to state the impairment loss that was recognized. You have to state the impairment loss that was recognized during the financial year. Right. So we can say the intangible assets a license What was it for, if we may know? To host an instant messaging platform. To host an instant messaging IM platform for mobile phones. Was impaired during the current financial year. Due to a competitor obtaining a similar license. The impairment loss amounted to 179,350. It was included in the other expenses line item in the statement of profit or loss and other comprehensive income. The recoverable amount was based on the, we check what did we use here, value in use. Determined using the company pre-tax discount rate of we're given 9.5%. So this information I'm taking it here, it's here. Right. Any questions?
No, not on my side.
Right. Now I just want to, that's the end of this one. On number 2, the impairment, you just calculate in the same way. You just have to know that this one is the value in use. Then this one is the, sorry, this one is the fair value. Then this one is the value in use. So your recoverable amount will be the higher one, the 1.2. Right. The only aspect that I would like to maybe show you quickly is this one here. Instead, so the carrying amount you just calculate in the normal way, but there are sometimes that you are not given the fair value less cost to sell, and you have to calculate it. Right. Maybe let me just quickly look at this one. I will not do the disclosure. I will just do the calculations. Is that right?
Yes.
And the
Right.
disclosure, you just do it in the normal way. Right. We were told that on 1 June 2013, the company acquired a bulky newspaper printing machine for 920,000. The machine had a useful life of 9 million newspapers and an estimated residual value of 250,000. The machine was available for use as intended by management on acquisition date. The machine printed 6,600,000 newspapers since acquisition until year end on 30 April 2015. During the current financial year ended 30 April 2016, the machine printed 1.1 million newspapers. During the 2016 reporting period, Barry Limited's biggest competitor introduced the new digital versions of their daily newspapers, which are more accessible to readers on a daily basis. These new digitally available newspapers resulted in a decline in the demand and sales of Barry Limited's printed newspapers. Subsequently, the fair value of the machine was estimated to be only 180,000 on 30 April 2016, and the legal fees relating to the possible sale of the machine was determined to be 8,000. The estimated future net cash inflows for the next 3 years relating to the machine were as follows. Right. So this is what we have. Then we are supposed to determine our impairment. Right. So the cost of the machine was what? 920. Right. So we can say cost 920,000. Right. Our financial year is ending 30 April 2016. And we know that machinery is accounted for according to the cost model. Depreciation is accounted for in accordance with the units of production method. Right. So our cost is 920,500. We know that there's a residual value of 250 and a useful life of 9 million. Right. Before this year, they used 6.6 million. They printed 6.6 million newspapers. So we'd say our accumulated depreciation on 30 April 2015 right, we'll take the newspapers that were printed up to 30 April 2015, which was 6.6 million. Okay, we can say 6.6 million divided by what? 9 million, the useful life, multiplied by the cost, which is 920,000 minus the residual value, which is 250,000. And remember that if they are using the units of production method, we don't mind about the months. When was it bought? Like for how many months it was used, we don't consider that. Right, what do we get?
Four 491,333.
491,333.
333, yes.
Right. Then carrying amount. That's 30. April 2015. Right, we'll have we'll get right, then depreciation for the year. Right. We are told that during the current year, 1.1 million newspapers were printed. What do you get?
It's 81889. 81
81
889. 81889. Double
you.
89. Yeah.
Right. Then we get our carrying amount.
Oh, it's different.
On 30 April 2016. Right, then we check for impairment, recoverable amount. We have fair value less cost to sell. Right, we are told that the fair value was 1.8 and legal fees relating to the possible sale were 8,000. So you have to subtract, it says fair value less the cost to sell. So that is equal to 180,000 minus 8,000, which is equal to 172,000. Right, then our value in use. Right. We have these cash flows here. So we have cash flow 1, which will be equal to 80,000. Cash flow 2 would be equal to 75,000. Cash flow 3 would be equal to 60,000. Then our interest rate would be equal to 9.5%. Then can you find the PV?
Okay. 80. 18. Okay, so this is the same as last week, right? So I always start with 0
Yes.
CFJ.
Yes.
Okay. All right. Let me get it. CFG 80,000. CFG 75. CFG it's my I. And then my PV should be the same as last week, NVP, right?
Yeah, exactly.
Okay, I'm getting 181,309.
309. Then you can see
Yes.
that here we can use the what value in use
Yes.
as it is what higher.
Yes.
This one is 172. So we'd use 181. There is impairment
309.
because the recoverable amount is less than the what carrying amount. Whenever your carrying amount is more than the recoverable amount, then there is impairment. Is that right?
Yes.
So then we
Yes.
calculate our impairment loss. That will be the impairment loss.
Okay.
Any questions?
No.
Okay, so you can just do the note. It's just a normal PPE. I think our
Yes.
friend
Okay.
struggled with network.
Yes. She did.
So we'll continue next week.
Yes. You will tell me what I need to do, right?
Okay, we'll talk.
For the other thing.
Yeah, you talk outside the class.
Okay. Thank you.
Sharp.
Ciao.